Okay, hello and welcome everyone to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 28th. Good to be with you guys this morning. Eileen, Premendra, Mario. Eileen says, good morning. I need to give more attention to the 7 a.m. slot for trading. Yeah, and it's a good time to have that crossover, Eileen, but also I always mention to you the Asia Open is where I've been getting most of my trades in. But great to be here with you guys this morning. Mark, Gary, happy Thursday to you as well, my friend. Premendra, Mario. Appreciate your comments here in the morning. So we just did get the release of the continuing claims coming in a little bit higher than expected. Goods, durable goods order is really missing the mark. We were expecting 0.7, came in at negative 5.1%. If you strip out X air and defense, you have even worse numbers, okay? And this is a very good gauge of business investment. So these are the preliminary reads for December. I really wouldn't put too much emphasis on them, but they do show a miss across the board on today's data for the U.S. You still do have some stuff left on tap. Bloomberg Consumer Comfort Index, not really going to be paying much attention to, but the pending home sales at 10, looking for a build of 0.9% month on month there. Obviously, tomorrow, guys, a major event risk is going to be the U.S. fourth quarter advanced read for GDP. We're expecting a 0.8% clip. Remember, this is the first read on the fourth quarter, so we'll get further revisions to that. Minho, great to see you in the room, sir. All right, so quick relative performance on the greenback. On the back of that release, you see that the dollar is actually weaker against all its major counterparts here, save the Japanese yen. So you do have Aussie top performer 0.73%. Kiwi, despite the fact that dovish commentary we got from the RBNZ last night, up 0.65%. Sterling with a pop of 0.59. All right, went a little overboard on my report last night. If you noticed, I did have a lot of setups in view. I've been mostly operating in the Euro Aussie and the Aussie Yen. I've been trying to get into Aussie Key, but haven't had much opportunity to jump into a new position there. And again, as always, guys, feel free to throw out any questions or trade setups that you'd like to review. We had a really good discussion yesterday. I did bring, I left my computer open all night just so I can save the platform and take a look at some of the trades that I got into yesterday since you guys found that so helpful. We'll continue to do that. Eileen says, overboard. Ha, you don't sleep. Not as much as I should, I'll tell you that much. All right, let's jump right in. So, obviously, dollar on a weaker tone. Here's what the dollar index looks like. First, on the daily chart, I just wanted to point out this median line formation. We talked about this briefly yesterday. It looks like we're approaching median line support. We rebounded off this perfectly yesterday. And if we do break below today, you're going to look for those highs from December, 12,004, 12,193, that reversal high day close from November. So a lot is sort of stacked up here, and we have really good levels on the dollar index. Here's what the near-term chart looks like. This is the 30-minute on the dollar index. A slight adjustment to that slope that we were working with yesterday just to keep that high in place still puts the focus downwards sub 12,238. And again, there's that key support structure, 12,204, 12,200 would be a basic 38.2 of the advance. And again, this is the high day close from last year. So immediately bearish sub 12,238, 12,254 is what's going to be the bearish invalidation level. We really need to top that, which is yesterday's high in New York, to really invalidate the south side here. So looking a little bit lower here in the index, eyeing support just above 12,200. Any questions on the dollar index before we move off? Just kind of want to touch base on it. Again, I know for those of us trading stateside, we can't really trade this instrument, but it can be a very strong tell on base dollar movements. So something to keep in mind. All right. Let's jump right into the setup from last night. Okay, so first things first, the Aussie yen. This was, again, a setup that was presented last night, looking for the upside to maintain that bias. Yesterday, you basically saw a break of the weekly opening range, okay? And although you saw it come back and pull below that, you continue to hold above the weekly open, which was 83.07. And we said that was where we wanted to continue to favor long side while above this in the immediate term, okay? The bullish invalidation level isn't until down here at 82.15. We raised that from 81.46, and that was going to be the confluence of the lower median line parallel, former channel support, and that swing high that we made last week. So you have a lot loaded up down there. Immediate focus higher above 83.07. That's almost exactly where this thing rebounded off of yesterday, guys. We pulled right up 83.57, popped right through 84.12. Now you're looking at the subsequent target still up top. Here's what the Aussie Yen looks like daily. Here's what it looks like on the near-term charts. There it is. So you can see we came right through that. I was looking at this trigger former support on a break above to possibly take a long here. It kind of held into last night, so I didn't get an opportunity to get too involved in Aussie Yen. The subsequent trigger came in just ahead of the European Open, and you're still looking at that 84.12 region as resistance, that 100% extension. Subsequent targets, you got the low day close for 2015, that's 84.72. The low week close comes in at 85.47, a little bit more of a critical resistance barrier up there. Presented this one on daily FX as well, guys. We did shift some of the levels before we printed it on SB last night, so no changes from those levels that were presented last night. You're still looking higher while above. At this point, you want to raise that near-term bullish invalidation level to here, all right, 83.57, which is essentially the opening range high for the week. So as long as you stay above that region, we'll continue favoring long trades. We'll be looking for long scalps or long triggers in momentum. And the immediate focus stays above 83.57. You'd really need to see a break back below that trend line to get on board with the short side of the trade. Now, it's having me a little bit more reserved on the Aussie Yen as we head into the end of the week, guys, is what the Yen in and of itself is doing. And I do apologize, whoever asked for the Yen yesterday. I noticed when we closed the webinar, we didn't get a chance to go over it. So I'm going to take a quick segue here and just take a quick look at the dollar yen. You know, it's not my really cup of tea these days, but still, you're looking at some near-term resistance that we are coming into. It may have some implications for the yen crosses, which is why Aussie yen on the long side might start to get a little tired here. You're seeing dollar yen confluence resistance any way you look at it. It's a basic 38.2 from the high, basic upper median line parallel from the decline, and more importantly, this wider base formation that we were following from the highs of last year, former upper median line parallel resistance, turned support, break, turned resistance. So watch that region right into 119, 118.93, big resistance. And if we do turn lower from there, I really wouldn't want to get too aggressive on the Aussie yen trade, but we'll be watching that 119 area of resistance on dollar yen. Any questions on the dollar yen? I know there's some guys that wanted to take a look at that here in the webinar yesterday. Forgot to go over it. Here's what the 30-minute looks like. Again, I haven't really placed any personal scalps on this. So if my charts want to open, oops. Gary, it was you. Yep, I remember. So Gary, there's dollar yen. I sorry I didn't get this chart to you yesterday. You didn't see much activity since then, so I guess no harm, no foul. But watch that 118.93, 119 region, really with a lot of intent. It's pretty big on the near term. Okay. So here's what the longer or the near-term chart looks like on the 30-minute. And the only thing I wanted to highlight here for you, Gary, is this. The weekly opening range is essentially what you're looking at. Here's your weekly open. You made the low at the 236 of that same retracement we were looking at on the daily chart. Just happened to be also the lower median line parallel, i.e. the median line of this formation from the highs. And now you've just tested the high and you've sort of failed there. So look at this consolidation near term. Geez, I'm sorry, guys. My computer's running slow here. Okay, there's that 38.2 at 189. So these are the levels I'd be watching near term for dollar yen. Look for this consolidation break, Gary. If you break it to the downside, which is what our preferred sort of move would be, again, I really wouldn't try to play with the Aussie yen at that point and kind of let that go. Dollar yen would look great for a short bias on that point. But if it does break to the upside, as opposed to playing dollar yen, if we do continue to see yen weakness, I do want to play that by way of Aussie. Gary saying, yeah, following closely at the moment, and Jamie has gone short from 118.66. I know. Trust me, we're always on the same page, me and Jamie. It's just that he's either looking for a much larger move or I'm looking for a much shorter time frame within the confines of what he's looking at. Is that 38.2 fib a general area for a pair to reverse a bit? Eileen, I don't want to assign different probabilities for retracements. So retracements are just levels of which the market is likely to find some support. It's always near term. As far as reverse the entire trade, I don't want to, peg that necessarily to a Fibonacci level, rather more just a technical feature that we're in. But you can get pullbacks off any levels, Eileen. 38.2, I mean, your 50 and your 618 are typically like your more critical reversals. 786 is typically known as the reversal of last resort, or the level of last resort. If you break through that, typically you'll see a run right through into the lows or highs. But yeah, you can get a pullback off this level. Aside from that, Eileen, let's just throw out the 38.2 altogether right out the window. It's the basic opening range high for the week. I wouldn't call that a break. Call that a false break, if anything. So you're just looking for either a pop above that 118.90 level or a break below this 117.80 level. And I know you probably think to yourself, so Mike, what do we do in the meantime? Nothing, guys. From a near-term prospect, nothing. It's giving you 27 pips on a quarterly basis here. It's not really much for me to get too excited about with this kind of price action. I'm with Jamie all the way as far as wanting to see the short side break, but until we get either a break of this basic trendline support, I mean, even this trigger, I was looking at this yesterday, the break yielded nothing. It yielded almost nothing. So let me see, actually. Oh, it's really hard to work with this lag here. Guys, bear with me one moment. Okay, sorry about that. So, Gary, does that help on the dollar yen? Any questions on that? Eileen saying, oh, okay, just matching it up for more levels. Yeah, you got it. Gary says, looking at your chart, slightly zoomed out on my OCD is seeing a pattern reverse head and shoulders back up to 123 region. Presume that's just my OCD playing up. It could be. It could be. Remember the broader theme of what we're looking at, guys. It could be a near-term bottoming pattern, 100%. But that's why the downside of the trade from here would sound so appealing, right? It's because you've already made a pretty decent rally off the low. You're hitting into a resistance Fibonacci level, which has continued to hold and has offered clear pivots in price previously since the start of the year. So yeah, and again, even if we do get a short trigger break here, Gary, I'm not saying this thing is going into 115. That's not our style. From the short-term frame of things, I'd only be looking to play into the weekly opening range low if not the actual median line here. And if we do get that break, again, guys, this is just, I hate playing the if game, but just to kind of put things in perspective where the thought process would be going, you tack on a quick retracement. And if you do that properly, 117.50, 117.15, more so that 618 would be a key region as it lines up with those parallels. That's like a 117.15. And this would be the initial target if we break the weekly opening range low. So here's your weekly open. If we break this low, that's sort of your first target on tap. Make sense? Gary, does that help? Eileen saying your favorable Asia time frame. When does that generally get going? Around 7 p.m. Eastern or a little later and until about midnight Eastern? So yeah, I start about 7. 6:45 I'll just be looking at the charts, but like 7 o'clock, 7:45. Yesterday I played a scalp from 7 p.m. right into the 8 p.m. hour. Remember, guys, just as we always use opening ranges for the sessions, for the days, for the weeks, you can even go opening ranges for the hour. And typically, this is not my word, this is just statistics. If you look at through price action, typically prices will tend to open and close the hours at the extremes, meaning if it's for an uptrend, the close of the hour will be, somewhere near the highs. If we're looking at a downtrend, vice versa. So I held trade for Aussie. I guess we can look at that next. Any questions on euro, on dollar yen rather, before we move on? Gary says it does. Many thanks as always. Cheers, mate. Good to see you in the room. Eileen says great, thanks. Yeah, let me take a look at that for you, Eileen. I'll show you yesterday's trades. Okay, Euro Oz. So here's what we looked like yesterday on Euro Oz. And the basic premise of the trade is this. Remember, ultimately, I do think you want to look to buy a pullback here in Euro Oz. Looking for a new low. We talked about this setup all week long. We've been following it. So yesterday was an opportunity where the trade came right back into the upper median line parallel and was rejected, and you saw some continued down triggers to the downside. Scalp looked like this. There's a lower median line parallel. We came right into that upper median line parallel through the session yesterday. It failed again in overnight, and that was where the opportunity was to get back on the short side. So as I noted yesterday, we were actually, was it here? Yeah, we were holding shorts against that range, that 55.40 range, which is basically the highs that we made in the previous session. Got out a little early on this one. The quarter daily TR was 70 pips. I took half of that on the first trade. Here's what it looked like, or here's what it looks like now. So here's that region of resistance. Here is where we went. We kind of spiked right through at the close of US trade, right? Came back. This spike early in Asia is really where you got the best trigger and where you got the best entry. I missed the ideal entry there, but once we broke back below, we got a chance to jump into the trade. Here's what the near-term scalp looked like on Euro Oz. Okay. So remember, we were looking for scalps up here. There's that spike. There's that initial spike. And the sort of ideal entry, whoops. So the ideal entry would have been on this rally, and on the way back down, the break back below 30. You see that? Or back below 70. So remember, we're never going to buy or try to go, use a trigger that's in above overbought territory. That's when the market has the most juice. It's the break below 70 that starts to mark near-term correction. So you got that break below 70. I missed the initial break. Once we broke back below 50 and on initial upswing here, we couldn't even attack the highs. Simple entry right against the high, looking for about 75 pips. Well, as we came into the lows, I got a resistance trigger break that gave away, and that shook me out of that position. So I kind of just jumped right out of that position. Again, sometimes these triggers are going to be for your benefit. Sometimes they're going to shake you out. But so is the game. You just got to roll with it. And you're probably asking yourself, well, Mike, if you're still bearish, then what's the point of getting out? The point is this, guys. I got into this position with a like 20 pip stop, right? You never want to jump into a position with a 20 pip stop and look for a 300 pip move because it just doesn't make much sense, right? So because my stops are so tight, again, remember, we could put a stop as far as 70 pips, but we're always trying to improve our risk to reward. So on a trade like that, just follow the discipline, okay? Also, I was noting that we were getting some divergence here. I wasn't on this chart. Yeah, it wasn't on this chart. It was on these two lows, not on the chart position I took yesterday. So the low we just made here last night, 3 o'clock in the morning, and then the low that we made subsequent at the start of European trade, you can see price action. Actually, this is called reverse divergence. This is not even a signal. I apologize, guys. You're looking for the oscillator to not confirm an extreme in price. So it looks like there was nothing to really shift your focus higher up to the upside in European trade except for those trigger breaks. But to go back to the point, I'm losing my train of thought here. Eileen, does this make sense? Why this trigger break was sort of the appealing position to try to jump into? Jumped in here again. I noticed some strange divergence. Oh, this is the divergence I was looking for. Gosh, a little off this morning, guys. Sorry about that. Price action made a steeper decline, okay, and the oscillator made a higher low. So I got shaken out here. It wasn't a really great entry for that secondary approach. This was the entry I took. Once I saw that we were getting some strong divergence, I just bailed out of the position, looked for a re-entry. Well, it was another trigger that panned out into a little bit earlier, or a little bit later rather, into European trade, into Asia trade, excuse me. And once we rallied into a decent level again, momentum was holding 60, okay? Again, divergence in momentum, price action making a higher high, not confirmed in the oscillator, equal highs, followed by a trigger break to the downside and a break of basic support. I actually jumped into this one a little bit early, but we had such a tight stop. Remember, it's a wider ATR. It's worth the risk. So again, looking in, stop against the highs, looking for about 70 pips. Again, on this one, got shaken out a little bit later. There was a topside trigger that gave out, jumped out of that position. There was another entry opportunity right here. And of course, this is where I start to get tired and say to hell of it and go to bed. But here's another trigger where, again, you had a plenty opportunity to get in towards that 54.50 region, looking for 54. So, guys, does this drill help? See, so the benefit of the strategy, or the benefit that we're working with here, is that even though all told, you might have only made 100 pip range, you were able to play so many positions within the confines of that range. They're able to really maximize intraday price fluctuations. And not only that, it's all at a minimum of risk, right? Because you're never risking more than maximum quarter of the daily ATR. So this is where the benefit of having a short-term sort of outlook really helps. But I thought that drill would sort of like kind of help you guys kind of visualize the process as we go through. Craig Wingate says, "I absolutely helps, Mike. Thank you. More than welcome, man." Kay says, "I don't understand the long trigger points you are looking at on RSI." So all that we're looking for, Kay, and you're a little bit newer to the room, so let me give you a quick breakdown, is that we're looking for the oscillator, a break of support or resistance in the oscillator, just like we do in price. And when you see that break in momentum in the oscillator, and it's coinciding with a break in price, that is where that is our trigger to go ahead and jump into the position. So, Kay, we're just looking for the momentum signature to give us some sort of indication of waning more momentum or a shift in current momentum. So basic trendline support, a break, right? Price coming into the channel support, breaks. That's your validation to jump in. Now, I jumped in early here, but what I wanted to show you is on the break, right? Once this thing finally broke below that trendline support, you had another opportunity when it came back and tested it as resistance, that same trendline support. Now that trend line support is your entry, your stop is against the highs, and you're looking for play the down play move. So even if you didn't take this entry, this was a little bit of an early entry because although the oscillator showed a trigger, price did not. But it turned out sometimes being lucky is better than being skillful. So it turned out to work out all right. But does that make sense, Kay? You're just looking for basic trendline support and resistance in the oscillator, just as you do in price. And all we're looking for is for this to show us a shift in the near-term momentum signature. Remember one thing, Kay, and I always want to stress this, very, very important. No oscillator should be taken to I don't want to say seriously, should be really focused on too much because these are all backwards looking indicators. RSI, stochastics, MACD, whatever you're looking at, these are all telling you what price has done, not what it's going to do. So, and the reason I say that is because we're not going to avoid a trade just because we're not getting a momentum signature. And at the same point, just because we got a momentum break doesn't mean we're always going to take the trade. So just a moment of caution there because people tend to fall in love with an indicator and every trigger they see, they're selling or they're buying. It doesn't work that way. We have to have a broader bias. So our bias is to the downside. I'm only looking for short triggers. I might draw the long triggers on there because that'll take me out of any short exposure I'm in, but I'm only looking for short triggers since I'm bearish and vice versa if you're on the long side. So, Kay, quick breakdown there. Thanks, guys in the room, for bearing with me. Kay says, thanks, that helps. More than welcome. Eileen says, the drill helps immensely, like the drill downs. You got it. You got it. So that was Euro Oz. Any questions on that? Remember, the Euro Oz setup from early in the week, we're still looking just for a tag of that major support at 53. This is huge, guys. It's really, really big. There's so much to look at here. And again, just touch base on it real quick. The 618 retracement of the advance for the year, just the 2016 trading range so far. The lower median line parallel of the operative structure we've been in off the lows. A 50% retracement of the entire decline off the highs we made from October of last year. And at this point, you also have the median line for the current operative structure settling all around that 53 handle. So real big level, guys. Absolutely critical. Is that 53.25 into the 53 handle. Okay, huge. Really, really critical. I mean, again, inevitably we'd be looking to buy till we get through this. Still short. Want to see that hit 53. It would be really, really beautiful move, I think, if we get it. Now, if we break below, I do need to premise this. This is the opening range low for the week. If we do break below and push through this specifically on a closed basis, sayonara. There's really nothing on tap till 51.50. Okay, it's 150 points to the downside. So just keep it in mind, guys. Both of the trades that we just discussed, massive ATRs. Okay, you got 76 pips here. So you just want to use some caution on some of these larger ATR moves. Combination of RSI, horizontal fib levels, and pitchforks all together, very powerful, says Mark Haverman. So basically our tools that we use, Mark, right? So, Kay, I mean, feel free. Being newer to the room, feel free. I want to take as many of your questions as possible, man. Welcome aboard. Eileen says, Aussie yen taking off up. Euro Oz 154.20, 52.41 is the daily reversal support. 52.41, huh? Patience, patience. Yep, there it is, daily reversal support. I mean, there's so much stacked up here. One other thing I would point out to you, Mark, is this structure in blue. I think we looked at this yesterday. Oh, I'm sorry, guys. This thing is just being extremely stubborn. Bear with me one moment. All right, guys. I'm going to try to work with a little bit smaller of a chart here. I'm getting a little bit of a technical issue on my end. I'm sorry about that. But for the Euro Oz, the only thing I want to do stress is if we do see the breakdown travel towards that 53 region, if it breaks through, I'm with you, Mark. That's that first level I'd start to look at. But I just wanted to highlight this median line. It's a longer dated median line we've been following on the pair. That comes in just right around that area that you're talking about as well. And you could see some strong reversals off this region. So I just want to be very cautious about getting excessively bearish at these levels. All right. If our charts agree with us, we will move right on. Last but not least from yesterday, actually, let me just take a quick look. Aussie yen. Yes, so there's Aussie yen. On the daily, yep. So again, the next topside target and the target node last night, 84.72, the 2015 low day close. The low week close comes in at 85.47. I think that's going to be a bigger area of resistance. But again, there's nothing for us here necessarily, right? I'm not going to go chasing the trade right up here, but the levels are pretty clear as far as the Aussie yen are concerned. So back to sterling CAD, which was the last setup from last night. I know it's an interesting pair, guys, that we don't typically talk about too much, but listen, if the pair is at a major key inflection point, it's always prudent to point that out. And I think specifically with how bad the sterling got beat up over the last couple of weeks, it might be a decent sort of rebound play here for the pound. So pound CAD looks like this. The major premise of this play, again, is this major key confluence of support right around 99.50 into basically the two handle, but it's 199.92. You're looking at the 618 retracement or extension, excuse me, of the decline off of the December highs, not the yearly highs from last year. You have a 786 retracement of the advance off of the October low. You have the lower median line parallel for the current operative structure off the high. This is just the embedded one. The larger structure, which again, we don't have too much conviction on because we haven't seen too many pivots off it yet. Nonetheless, that median line comes in right there as well. Basic trendline support. And I'm not done yet. 200-day moving average. Now I'm done. So there's a lot down here. So you'd be looking for a drop towards 99.50, 99.90, an area which I'd start to look for possible exhaustion. Momentum is holding that low. That is divergence, new extreme in price, not reflected in the oscillator. So I wouldn't be surprised if this thing makes another run at the lows, but this is a major inflection. If we close below it, sayonara, look for 97. If we do get some long triggers, specifically on the intraday down in this region, I would definitely be interested in trying to play that just for a near-term recovery. Looking at resistance up here at 201.95, major key resistance and bearish invalidation up at 203.20, 203.40. Big range ATR, guys. 225 pips on a daily basis. Okay, oil breaking up. It has just broken 2.3, says Mustafa. Okay, Mustafa, you're gonna have to give me just a couple of minutes, man. I just want to get through this. I keep jumping off these pairs. We lose our train of thought. Eileen is saying Aussie on the move all around. Euro Aussie dropping, Aussie dollar breaking up, and Aussie yen running. I guess we do got to go back to the Aussie crosses. You know. So Aussie dollar made a fresh break of the highs. Euro Aus 53. Still looking for 53. Can't do anything here. That trigger actually that just broke would have been the best opportunity for us to take that short. Oh, do miss a lot of positions during these webinars. Yeah, I can't advocate chasing that, but look for 53. Big region of support. Aussie yen right through the resistance. $84.72 and $84.47 next topside targets. Looks good. So again, guys, we can't, necessarily be watching all these trades at all times of the day. So don't wait for my okay. If you see the position and it's going through one of the moves and you got a trigger break, I'll be more than happy to review it for you. But I don't want you guys waiting for my approval because there's no way we'll be able to effectively go through all these setups and follow this every day. So feel free to be taking these nice moves. Again, Aussie yen, big resistance, at least in the initial, is just below that 85 handle. All right, so Sterling CAD, to go back to where we were on that, is there any questions on the Sterling CAD setup? So here's what the 30-minute looks like. And again, as I noted in the piece yesterday, we could still get a run at the lows, but we're inevitably looking to buy this dip into 99.50, 99.90. Just for a near-term recovery, again, the major resistance profit target we would be looking for would be like 204.40, 203.40, 203.50 right here. But we're definitely going to be on the lookout for this. Another ATR that's somewhat sizable, not as big as the 75 pip Euro Aus is, but still 57 pips on a quarter of daily TR offers some nice ranges. So looking for long triggers as we head back towards that 199.90 level on Sterling CAD. All right, now let me jump into your questions, guys. Feel free to throw them on the message board. Anything you guys want to check out or look at, be more than happy. Those are the 4 setups I was tracking last night. Again, I've been mostly looking or mostly involved really in the Euro Aus. Haven't taken anything on Aussie yen. Aussie Kiwi, excuse me, is another one. I would have loved to see a little bit more of a magnitude pullback to be able to try to get in the long side here, alongside with those with the swing trades, but haven't gotten it just yet. Some other trades I just want to talk about real quick. We talked about Sterling CAD. Is it a similar setup on Sterling Kiwi? And the monthly OR, I just want to set that the monthly opening range on here is set in my notes, is perfectly set between some major key technical levels. And that's basically the major support confluence that we talked about early in the month right here at 216, 214.40, this region here, with resistance and the opening range high for the week. I'm looking at 223.10. I know we probed through that, but we haven't closed above it. And this was also the low that we made there in the early December opening range. So I like this pivot. And you're essentially looking for a break of this range. We may not even get it this month. We may not get it till next month. That doesn't matter. All that matters is that we recognize what the key levels or thresholds we need to break through. And that's either below this major confluence or above this major confluence. In the meantime, this is a trade where you want to be comfortable trading the range. I wouldn't look for a full quarter of the daily ATR with 290 pip. Just keep that in mind. Be a little bit more nimble than that, but feel free to play that range until we get that breakout. And like I said, if we don't get the breakout today, or this month rather, a lot of the ways I like to play these opening ranges that never break is the next month. It's just the opening range for that month. So for February, we'll still be focused on either a break above 223 or a break below 214.40. So again, probe just above that median line there, but broadly speaking, you're still within the confines of the basic opening range. Okay, Mustafa, I want to take a quick look for you. I know you've been going nuts over this gold, over this oil thing. Let's take a look at what's doing. Okay, so we hit that 33 target. Remember, 20, can't speak today. 32.95, 33 was the major resistance we talked about yesterday. Popping through, 618 comes in at 34.23. But if we do close above this region, I would expect to see a larger ascent. Now, don't go chasing this up here if you're not already long, just as a quick moment of caution. I do want to see where a simple correction takes us. Beautiful. Beautiful. My favorite setups. 100% extension off the low, 618 retracement off the high, 34.23, 34.40 initial target on this breakout, or initial area of resistance for this breakout. Eileen says oil up causing Aussie up. I don't want to necessarily make that correlation. It's more broader risk. It's really such a not good day for the computer to be freezing. Yeah, fresh session highs there. So nothing for us to do necessarily right here. I do want to just see and make sure. Okay. Could be in play. Long story short, 71.36 is your next upside target. That completes 100% extension off the low. Next up, 71.70, but I do like it. Do like it. Eileen saying, so risk is on today, seeing on Twitter that Russia and Saudi Arabia proposed to cut oil production by 5% in each country. Guys, I don't really want to pay attention to those headlines. You know, that it's going to keep coming out every day, these comments. But give me one sec. Let me just bring up Bloomberg here, see if there's anything. Yeah, I really wouldn't put too much emphasis on these headlines, guys. Not yet. I don't see anything here that's going to necessarily be earth-shattering here. But in any event, I wouldn't necessarily look at Aussie for crude, Eileen. If you're looking for that, Dollar CAD has been something that we've been really interested in recently. I looked at this decline yesterday and was looking for the decline to push a little bit lower. We got it today. Yesterday failed to close or failed to tag this. Remember, we were talking about it in the webinar. I was looking for a move into 139.68. It looks okay. Looks like we've already tagged that. So the low is 76. We'll get there. 39.68 represents a 618 extension from the decline off the high and a basic 38.2 from the advance off that low that we made in October. So a break below this region really opens up 137.50. There's nothing I would really pay too much attention to ahead of that. 137.50, 137.60, just this near-term trendline support. It's a two-tag trendline support that comes in just ahead, right around 38.18 or so. But I do like it. The only thing is momentum is sitting at 50. So today's close pushed through 50 and a close below here would be needed to keep the immediate bias weighted to the downside. If this thing holds above 39.68 into the close, I'd be very cautious. I'd expect to rally back towards like 42.50 and then I'd start to get short again up there. But it looks good. I mean, on its face value, again, basic break of the weekly opening range. Here's your Monday, Tuesday high stretch. Wednesday, we checked the lows and it held. Thursday, break the lows. Look for that late week low. And that makes perfect sense, right? It depends. It makes perfect sense, or it jives well with sort of a near-term expectation for possibly a little bit push higher in crude before we continue to resume in the overall trend. Avery says, Mike, have you gone over the dollar yen? Joined the webinar late. Very sorry if you have. I'll just review the archive. We did briefly, Avery. Again, nothing I'm really looking at. The only thing I want to show you real quick is just that resistance range. The only thing we talked about. Pretty big resistance here. So watch that 1893, 119 barrier near term is a big, big level. If we do pop through that, you can get as high as 119.85. I personally am looking for a hold here. Our favorite approach, obviously, is to see a hold here on the dollar yen. All right. Avery says, great, thanks. You're more than welcome. More than welcome. Quick touch on gold. Extended into that trendline resistance that we talked about yesterday. And the warning that we gave 2 days ago is a little bit early, but this is what the warning was about. You're coming to the upper median line parallel for a formation that's held for more than 4 months, 5 months, and momentum briefly holding above 60 before breaking down. So the trade still remains constructive above 1096. That's the low day close for for the July calendar year, excuse me. And the lower median line parallel of the current operative structure coincides in that right over the next few days. So watch that key support also ends up being the weekly opening range low. So beautiful setup here on gold. Top side break, you got the 200-day moving average, got the 618 to deal with. Once we clear those, 115.45 is definitely on tap. Constructive above 110.96 near term. Any questions on bullion prices? That's sort of been a textbook play this week. Gold, we went over. Crude, we went over briefly. Just show you the chart again. Initial resistance, almost there, 34.23, 34.40. Kiwi dollar. We didn't talk about Kiwi real quick. Again, you got some dovish commentary saying that there is room for further cuts on the main refi rate if needed, says the RBNZ yesterday. So obviously you saw that thing play in kind, and there's what the dollar or Kiwi dollar looked like yesterday. Interestingly enough, as everyone on Twitter was rolling, was going nuts. Oh, sell the Kiwi. They're gonna cut rates. Look where we are, guys. Look where we are. And in fact, something I was joking around with some of my friends yesterday on the desk. All we did on the entire RBNZ interest rate decision was check the weekly opening range low. That's all we did. That's all we did. So don't fall into all the hype, guys, and all the noise that you see on Twitter and all the noise you hear in the broader market. Keep our discipline just as that. I needed to see a break of the weekly opening range low to validate a near-term down bias. Yeah, you got tons of volatility, and we rocketed right into that region, but we couldn't close. Okay? And in fact, the opening range for Asia broke to the upside. So fading that move, was sort of the thing to do. Aussie Key was the trade that Jamie is talking about. We talked about that earlier. Aussie Key, I personally took a position on yesterday, and I got stopped out at break even, I think, right? Here it is. Here it is. So on the trigger to the upside, trying to take a long approach here. Played it too close. Once it started moving in my favor, I actually just put the stop at break even. It came, stopped me out, and moved on. So would have been a trade that if I was a little bit more aggressive on, we'd be in the money right now. The only thing I just wanted to note is that my entry was horrible here. And I have no problem. I recognize that if you get into a horrible entry, guys, I'd much rather take a break even stop and miss the opportunity than to try to open the stop up to try to play it. So on a trade like this where it wasn't really the most ideal entry point, I took a break even. Long story short, you would have been more than happy with a quarter of daily TR on that Aussie Kiwi move there to the upside. But a pretty big region, pretty big move here for the Aussie Kiwi. And I think, again, specifically with the Kiwi, sort of a sleeper sell. The downside, I think, was way overdone on the back of that. They didn't necessarily cut rates, right? They just jawboned with a little bit more rhetoric, maybe more saber rattling, saying, hey, we're there. And Wheeler is a genius with this kind of stuff, just talking down the market. So those levels we'll be looking at on Aussie Key, still favoring the upside. Kiwi dollar is still just within the confines of its weekly opening range. No change. Any question on Kiwi dollar or Aussie Kiwi? Hey, Eileen, I saw your question there. Says, oil's up, causing Aussie. Oh, okay, I'm sorry, I read that wrong. I thought someone was asking what's causing the oil move. Guys, when you ask questions like that, it worries me because at the end of the day, who cares? I don't mean to be just to throw it in anyone's face, but who cares what the reason is? We've been bullish. We've been talking about crude coming off support, and the probability. You guys all saw this chart yesterday, right? So why does it matter if it's Saudi Arabia or if there was some kind of, God forbid, major catastrophe, or there was an elephant rampaging, like going nuts and just massacring oil fields? I don't know, whatever the case may be. Our discipline is price action. Our focus is price action, and that's all that matters. Now, obviously, economic releases, data prints, the docket is something we need to be aware of. We need to know when these events are coming out. But as far as trying to say, oh, oil went to 34 today because of X, doesn't really bother me. And I think to spend brain power trying to rationalize it in your head doesn't mean anything, right? So watch 34.23, 34.40, big area of resistance near term. And we'll have to see if we get a close above that or not. If we close below it, look for the pullback back towards 33. Definitely on the cards, back towards the median lines again for near-term support. Rhino stampede, Eileen says. That's what I was trying to say, right? What I end up saying? Elephant stampede. Okay. Market scope was freezing. Oh, it is. You guys were seeing a little bit of a freeze in market scope too today. It wasn't just me. All right. Okay. So if there are no other questions, sterling yen. I just want to touch on sterling, and I have that highlighted from 2 days ago. We went over it here in the webinar, so just take a quick look at where that trade is. Ooh, so it did actually hold that. I haven't looked at this in a while. Big region, 1618 extension off the high at 38.2 off the low. Gave you a confluence region of 64.16 to 65.60, 100 pip gap. Huge ATR here, so keep that in mind. But this does constitute a break of the basic weekly opening range high. So it certainly suggests that you could be seeing a little bit more of a shift here to the upside on sterling yen. Kind of jives well, right, with where sterling key is trading at. We went over that earlier today, right? Sterling key or sterling CAD, excuse me, at a major key support. And for that matter, sterling key and sterling Oz both have a very clean monthly opening range setup. But this, see what the scalp looks like on sterling yen. It's just a basic break of the weekly opening range. Okay, so you want to be cautious because even though we are breaking, I remember this now, even though we were breaking the weekly opening range high, we're still in the confines of this median line formation. So I'm still looking higher, but to get into a position to make an operable trade from here, I'd need to pull back towards the median line, towards that 168.15 target. Or if we break higher from here, a pullback to trade back off that level, looking for that 73.80, 73.40 level. This is big resistance near term for sterling yen. Eileen says, for Euro Aussie, once it hits 53, wait for the pullback. How far? And look lower. It touched a few pips away and pulling up now. So because we've seen how much resistance or support this thing has offered since last week, we couldn't even bottom into it. Early in the week, we failed. Yesterday, we failed. Here we are again. We'll need to see a close below it. If we close below it, Eileen, still like in selling rallies. Taking a position from here, if we get into, let's take a look. Maybe there is an opportunity to play a little bounce off the low here. I think we already missed it. Okay. We got just a couple of minutes into the U.S. Open. Watch for the U.S. opening range. If we get a move back towards that low and you get inevitably a resistance trigger giving out, I would be interested. Oops. I would be interested, Eileen. The only thing is this. I don't want to there we go. I don't want to look to necessarily fight the trend, right? Because we've been bearish. It's in a downside trending formation. If this is a legitimate break of the weekly opening range low, you might not want to actually, fight it. The fact of the matter is momentum is holding 30. Price is still holding the weekly opening range. I'm going to look to see if this breaks. If it breaks 30 to the downside and you get a push through, I'd look for a rally to sell still, okay? I wouldn't do anything from right here. Remember, we were in on the short side of this one yesterday. And it all yielded very clean short triggers, okay, on the 1 minute. So without a trigger, I don't think I'm going to want to necessarily take a view on this right now. See, so you get some good triggers on here over the last couple of days. So let's see if we can get one here. For the upside, this is what I want to see break. And that's okay. Remember the comments we said yesterday, guys. Even if the trade, if you miss the initial trigger, these sometimes are just here to help us ascertain bias. It's not always going to be push the trigger right now. It's just, it broke, momentum broke, we broke the lows, okay, we're bearish. We're looking to sell rallies. Let's move forward from here. All right. I'm going to cut it through there, guys. I really apologize about all the technical issues I had this morning. I'm not really sure what's up, if it's Market Scope or my computer, but I'll definitely have that resolved before next week's webinar. Don't forget, Jamie's on tap later today, 1 p.m. for the midweek strategy webinar. Maybe not midweek this week, but we wanted to avoid some of that volatility yesterday. So make sure you guys catch him at 1 p.m. Eastern. And again, wish you all a happy, safe weekend. We'll pick things up on Monday. Remember, there's a public free webinar on daily FX on Monday. And we'll be back here on Tuesday, Wednesday, Thursday, 8:30 Eastern next week. Till then, best of luck trading, guys. If there's anything new, I'll throw it on the radar charts tonight, but I don't think we'll have any major new updates on a new pairs aside from the ones that we're following. So keep your eye on some of these Aussie crosses as we head in. Kay says, well, would it be possible to obtain the current chart in focus for import, into MarketScope? It would save me trying to recreate them myself so I can track price action. So Kay, that's been a question that's been asked before. I don't want to set that habit. These charts I work endlessly on. I slave on a daily basis to keep them updated. So I would need to send you that update on a daily basis. And the more beneficial to UK is to actually learn the strategy and learn how we're setting these charts up ourselves, so that inevitably you're able to do it on your own too. So just a tad there, a note on that comment, Kay, for the request there. Best of luck trading for the rest of the week, guys. I'll see you next week and have a great weekend. Cheers.